My name is Aditya Mandloi. I'm the Managing Director and Head of Business Banking India for Standard Chartered Bank. I'm joined by my two esteemed panelists, Mr. Y.S. Chakravarti, Managing Director and CEO, Shriram City Union Finance, and Mr. Alok Mittal, Co-founder and CEO, Indify. This particular session, Accelerating MSME Lending, is a very pertinent one. India has approximately 63 million MSMEs, and even as the financial infrastructure has improved over the years, the access for finance to these MSMEs remains quite a challenge. Of this 63 odd million MSMEs, only about 30 to 32 million have access to formal credit. This is largely due to information asymmetry, lack of credit history, formal documentation, etc., leading to the unwillingness on the part of lenders to provide finance to this particular segment of borrowers. The MSME sector's credit exposure is to the tune of about 20.2 lakh crores as of March 2021, and there has been an element of growth of about 6.6%, which has moved up. In financial year 2021, the credit disbursed to MSME sector has been 9.5 lakh crore, largely on the back of the Atmanirbhar Bharat scheme of ECLGS. The overall scenario for credit growth within MSME space is set to change on the back of three key pillars. A are the key government schemes such as the Prime Minister's Employment Generation Program, the Credit Guarantee Trust Fund for Micro and Small Enterprises, Credit-Linked Capital Subsidy Scheme, the SIDBI refinance, amongst many others. The second key pillar is really the digitization framework, which encompasses data repositories such as the CKYC, digitized income documents such as GST data, account aggregators, and the OCIN framework. And the last pillar is really the fintech ecosystem and partnerships. Within this, the digital lenders are solving major challenges in providing credit at each step of the value chain. Many early stage NBFCs have shifted from feet on street model to digital based models to increase this last mile delivery of credit to the MSMEs, currently being underserved by traditional partners. Against this backdrop and context, I would first like to invite Mr. Chakravarti to provide his thoughts, experiences, and comments. Mr. Chakravarti?
Yeah. Good evening. Good evening, Aditya, and good evening, Alok. Good evening to all the participants. Following on what Aditya has mentioned, there are still on a Udyam, if you look at the Udyam platform as of today, you have about close to 30 million businesses that are there on the Udyam platform. So there is a lot of universe out there which is not there on the platform itself. And within this platform, about 90 to 93% businesses are micro again. So there is a large gap of, as you said, information asymmetry for large players to extend credit to the small businesses. And the need of the hour, I feel is, as you said, yes, fintechs are actually doing a great job in trying to, create an ecosystem and create a credit underwriting process, so which will enable either them or their partners to deliver credit today. Apart from, I think when you look at it, the major problem today is one, how do you reach these small businesses, the last mile challenges? Number one. Number two is there is also a close to a 5 lakh crore dues outstanding from mostly the public sector, a little from private sector to these businesses. There are two problems. It's not just the credit, availability of credit, but also getting the money in time is becoming a major problem for the MSMEs. So I think there are two things that needs to be solved for the MSMEs to do well in this country. If the Prime Minister's dream of reaching that 5 trillion the economy reaching 5 trillion has to become a reality. 30% of the economy is struggling today for lack of credit and for lack of, I would say, yeah, for not being able to receive payments in time for the supplies that they were made. Specifically, I think the public sector is a big number one guilty party for this. So the two things, both these things needs to be solved. It's just credit availability will not solve this issue. So see, there are a lot of mechanisms where in this country, the last mile, even the smallest village, somebody who's supplying milk to a dairy is getting paid on a daily basis, on a weekly basis. Why not these MSMEs? Why are they not getting paid? I mean, I think that's where the industry or the regulators needs to focus. Credit delivery, yes. Uh, the banks, NBFCs, and the fintechs with their partnership can definitely accelerate the delivery. Uh, Fintechs are doing a phenomenal job, as I said earlier, of reaching out, creating surrogates, creating an environment where they can actually compare pin code to pin code and create credit profiles of these for these businesses and enable other lenders to reach out. The only way, my personal conviction is that we need to have a partnership among these three for us to reach out to this small businessmen, which will enable them, one, reduce the cost of credit and deliver it faster to them. Uh, I've been working with the small businesses for the last 30 years, and I'm seeing that, I mean, I'm overwhelmed because there's so much to do and so many people to serve that we are a small drop in the ocean. The need is so big. Uh, I think there is space for a lot more players in this sector and a lot more dedicated people like Alok uh, to deliver these solutions to the last mile.
Mr. Chakravarti, if I could just, ask a specific question just
Please.
based on some of the points you made out. You spoke about not just access to credit, you also spoke about the realization of receivables, where platforms such as Trades can really play a big part in timely realization of these overdues, right? Uh, Now, even in terms of cost of credit, which was your other piece which you mentioned, there is also a very big need that most of the financial institutions do when it comes to MSMEs is really take comfort by seeking collateral,
Yeah.
right? So, what would be your thoughts given the experience and as you see going forward on how do we leverage and move financial institutions into a space where they would be comfortable lending relatively bigger tickets from an unsecured perspective rather than continuing to derive comfort only based on collateral?
Uh, Aditya, you're able to hear me? Sorry, I just missed your last. Hello?
Yes.
Yeah.
No, so just wanted yeah, can you hear me now?
Yeah,
Yeah,
yeah.
so just my question to you really was really around how do we try and wean away institutions as a thought process from collateral based comfort and lending towards more unsecured where the ticket sizes are bigger, because otherwise a lot of players, if they want to do unsecured lending to the MSME space, they're with relatively smaller ticket sizes, right? And that also becomes a big hindrance. So your views on alternative use of data analysis, etc.
See, I agree with you there. In fact, even I am guilty of what you're saying. So you actually confine yourself to a smaller ticket size because the biggest constraint today is, as you said, visibility of earnings, data. Uh, 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 so, as I said, the best way for me to do this is partner with people who have built these algos and alternate data, work with them, do pilots, and go forward uh, basing on the experiences. I don't think, as of, see, uh, though the banks were supposed to do this, the government is urging the banks to do this, uh, it's not taking off because bankers are also worried that end of the day it'll be on their head. So, uh, so basically, the only way I think a way forward for institutions to lend, do a larger ticket unsecured lending, would be on, as I said, no, uh, uh, access to data, and that's the only thing that can determine what we can actually take a call on how much to lend. Access to data, number one. Number two is, uh, see, for example, some of these supply chain funding that is happening, or small vendors who are on platforms, who are selling on platforms, which is giving a good visibility of their earnings, their sales potential, their sales, and as a consequence, you're actually willing to up the ticket size. So unless you have access to the data, it's very difficult to do an unsecured lending, large ticket unsecured lending. Number one. Number two, probably the today the availability of your GST data and the other collateral data could help us in solving this issue.
Yeah, thank you, Mr. Chakravarti. Uh, could I could I now request Alok for you to share your views and thoughts on this entire approach on accelerating, the credit growth and funneling more credit to the MSME sector,
Thank
and
you.
basis your experience. Yeah.
Yeah. And thanks, Mr. Chakravarti, for your kind words. I'll just kind of break up my opening remarks into two sections. One, more around where are we seeing the opportunity and where are we seeing some of the solutions to the questions you raised, Aditya. And then second, what needs to get done to, scale this up. What is the challenge with MSME lending, right? Why hasn't it scaled so far? In spite of the fact that some of our best and brightest brains are in the banking industry, right? I think there are two key issues. One, which is very well known, is the information arbitrage issue. Information is not available, but information arbitrage actually refers to more than just information not being available. It refers to the lender not having as good an understanding of the borrower's business as the borrower herself has, right? Now, in my mind, this is an outcome of separating the banking system from the transaction system. So if I'm a retailer, I'm buying my goods on Parchi from a distributor, but I'm walking up to a bank branch or an NBFC branch for my credit. And separating these two worlds is what causes information asymmetry. Now, this was necessary in a world where the technologies did not exist and conflict of interest existed. And so we said, okay, we are going to separate these two kind of entities out so that there is proper governance around the credit function. However, now there is enough technology to integrate credit back into trade. We all are familiar with supply chain financing, which is a classical example, works very well at a large ticket size, big company level. But the same concept can now be brought down to a micro business. So, for example, every micro business today is accepting payments through some channel, credit card acceptance, UPI, and that is giving us information on the volume of transactions they are doing, the consistency of transaction they are doing, and both making data available, but also bringing credibility of data to the table. Small businesses are selling off the Amazon platform, right? They're advertising on the Facebook platform. They are delivering food through a Zomato, right? So in our minds, every small business is a connected small business, and discovering those connections is integral to reducing the information asymmetry as well as providing a distribution mechanism. So today, in our own business, for example, we have partnered with more than 100 such ecosystems, which provides us with a collective reach to about 20 million MSMEs. So we are still not at 60 million, but we can see the pathway to getting there. The second core issue with micro business lending has been the operating cost stack. And that is why some of the emphasis around your question of big ticket size lending starts to come in. Actually, lending doesn't need to get big; it needs to get smaller and faster. And there the use of technology is essential because what it does is to reduce the operating cost and hence make smaller and shorter tenure loans viable, thereby obviating the need for collateral and right sizing the product, right? So today, my view is in most collateralized lending scenarios, the borrower is actually overfunded. And that is what causes diversion of funds into non-business activities and creates credit risk, right? So we are actually trying to find solutions to making loans smaller and faster rather than trying to make them bigger and longer tenure. Now, what are some of the enabling elements that can really make this process scale, right? First of these is, process bottlenecks. And while a lot has been achieved on that front through various elements of India Stack, today more than 85% of our loan agreements are digitally signed. Right? 2 years back, that number was in the 20% range. So there's a lot that has been achieved, but there are two specific areas that remain constrained, right? One is the ability to get an electronic repayment mandate in. Again, mechanisms exist, but there's a big gap between what is possible and how much is actually flowing through that system today. And that necessitates this one physical leg of collecting post-dated checks or collecting a ACH form, which otherwise is unnecessary in the whole process. The second is, while the consumer KYC issues have been by and large solved, the business KYC issues still remain to be solved, right? So both from a regulatory standpoint and from an enablement standpoint, I think those are areas that need to get focused from a process standpoint. Second, and much of this is again underway, is opening up data access, democratizing data truly. And account aggregator got launched this month. GST data should come on board by next month. I think we need an aggressive public policy to open up all data with consent of the customer. Right? So accelerating data will accelerate lending to MSMEs. Third, there is a lot of business model innovation that is going on in this space. Mr. Chakravarti alluded to this. We don't work only through our balance sheet. We work in partnership with a lot of other banks and NBFCs because that is how the capital supply will scale. However, the regulatory constructs today are very, very entity driven. Credit bureau access is not available to platforms. It's only available to banks and NBFCs. Right? Account aggregator now will be available only to regulated entities. KYC can only be performed by regulated entities, right? Now, with the degree of control that technology is providing us and the visibility that technology is providing us, I think there is a need to support these business models where the different functions in a credit value chain will get unbundled. Right? So we may be responsible for distribution and technology enablement of the onboarding process. The lender, of course, will be responsible for their underwriting decisions and for supplying capital. Now, as you start to think about separating these responsibilities, there is a need for a more flexible regulatory architecture which focuses on our obligations for the role that we are playing and not by the entity type that we are. Right? So I think that can be a big enabler to making such partnerships work and supporting business models innovation that can scale. And finally, there is an issue with capital access. And a lot of this came to fore during the COVID time period, where younger NBFCs and smaller NBFCs essentially did not have access to funds at a reasonable price. Much of that initiative on part of the government and regulators got limited to AAA NBFCs, AA NBFCs, right? And while that is important from a size standpoint, that is not necessarily adequate from an innovation standpoint. So in my mind, these are the four set of issues that need to get addressed: process bottlenecks, acceleration of data availability, support for new business models, largely in terms of unbundling and partnerships, and in terms of enabling access to capital for intermediaries so that it can flow to the small businesses. So I'll stop here. Happy to discuss further.
Yeah, no, look, fantastic set of points, and you articulated them very clearly. Just a point when it comes to where you mentioned about the data access, and frankly, that is what will be the core of getting the entire piece on the transaction system and the banking system aligned. And when you have multiplicity of partners and data sharing, the key question that comes in is around data privacy and the control of data. So, what would be your thoughts around that? Because if you ask me, that would end up being, if you don't have a ring fence solution around it and safeguards, uh, then the set of maker checkers that invariably get introduced can actually wean away people from signing up to solutions which otherwise would have been very helpful.
Yeah.
What would be your thoughts on that?
Yeah. So actually, I think that is one of the areas where India is being proactive, and rightly so. So the data, privacy bill, personal data privacy bill, is in the parliament, and that lays out fairly well in terms of what are the obligations of any data fiduciary towards the customer's data, right? And principles like taking consent from the customer, purpose limitation of capturing data. I think those are absolutely the right principles. Second, more than that, we also have a technology architecture now in form of the account aggregator DEPA, which provides the foundation of how to build it. So I think all data sharing must happen with those attributes in place. But let us also look what is the status quo right now. Right today, a small business which wants to apply for this loan actually takes printed copies of their bank account statements and submits them to 10 different places. Intermediaries who are not regulated, who don't have any oversight, right? And so, we have to make sure that the future is better than where we are right now.
Absolutely.
The immediate future will not be perfect. And as long as we continue to move towards that and we maintain oversight of that, we'll be good. So I'm actually very, very encouraged by some of these protective elements that have been thought through by regulators and are being put in place almost as a common operating infrastructure, so that the digital lending and movement can take off.
No, thank you for that. Mr. Chakravarti, would you want to, weigh in on any of the specific points that Alok touched upon? And I'm also conscious of time. We've got 4 or 5 minutes before we need to wrap up this session.
I think I agree with Alok on the privacy of data. But then the new framework that is being contemplated, and the account aggregators, data with the account aggregator, I think that should, if that's takes shape, I think that should help a lot of the small businessmen. As you said, today, if I want to look at a bank statement, the only option I have is either he submits a printed copy or uploads a PDF, which is a tough job for a lot of these small guys. So if there is a plugin, probably through an account aggregator and through a permission, where I can go have a look at the bank transaction history, look at the GST history, things like that. So it becomes, the life becomes simple for the borrower, and it becomes that much more simpler for me also. So the transaction costs will come down. I will be able to price the product. We will be able to price the product appropriately, as per basing on the risk, and the overall cost would definitely come down. So it's a win-win for everyone in the environment. Today, the good guy is paying for the bad guy. So probably we can actually narrow that anomaly there.
Yes. Uh, a slightly different take based on Mr. Chakravarti, what when you were giving your opening remarks, you had touched upon just about 20 million odd MSMEs being there on the Udyam portal,
30 million.
right? From
30 million.
30 million, right?
Yeah.
Now, how do you see that play out? Because the reason I'm asking is, are you seeing that to be in the short term a kind of a bottleneck which could prevent certain MSMEs who've not yet managed to register, not being able to avail of schemes or being excluded from what the formal financial sector could do, and therefore prolong the period of adoption, etc.?
No, I think, see, whatever has happened, it's good that has happened. This 30 million has happened in a short term. It's not a, probably if you look at it 3-4 years before, it would have taken a huge amount of time. But the process is very simple. So I think it's more of, what is lacking is, I think, more of an awareness of what are the benefits that you can avail when you get onto an Udyam rather than anything else. I think that's what we need to do. In fact, whenever my team goes into the market to talk to people, this is what we are talking about. Get enrolled, because there are a lot of assistance from the government that's available, which you are not able to avail. So I think we need to work on this. There is no shortcut or shortcut for this. But in a country of this size and literacy rates, number one, number two, also the apprehension in a lot of people's mind on, sharing data with the government agencies, as it what it is. It may take some time, but I think we are in the right direction. It's awareness campaign is what we need to do. Keep talking about it. Make noise about it.
Yeah, no, thank you. Thank you, Mr. Chakravarti. My last question before we can wrap this session, Alok, would be to you. There was a point that Mr. Chakravarti raised around the timely realization of receivables, right? Which really, while you touched upon the various 4-5 pillars on how to accelerating credit, but one of the other pain points that continues to plague MSMEs is getting the receivables and the monies for all the efforts in a timely manner. So, what would be your thoughts and your experiences and suggestions on how this could be looked at?
So I think again a lot of interesting work that's already been done. I think Trades is a great step forward. And in the last session of the Parliament, the factoring bill has now been amended to allow NBFCs to factor. I think that will help in deepening the factoring markets in India, and both through Trades and or otherwise. I do think that beyond just constructing specific platforms, there is a need for a regulatory solution that allows more and more NBFCs to factor or do invoice discounting in a more distributed manner. So, for example, in the US, a receivable is actually by law an assignable piece of paper, right? And the payer has to respect an assignment. They don't have a choice. By law, they have to accept it. So simply enabling, legal assignment of a invoice, of an accepted invoice, can unlock that market in a very, very distributed fashion. You have to remember that receivable financing is the problem for the seller, not for the buyer. So buyer-centric
Absolutely.
platforms which enable receivable financing will always extract rent from the MSME. So I would think that we should try and enable mechanisms that are in control of the seller, and enabling assignment of invoices and them being legally enforceable on the buyer is one such possibility.
Thanks, Alok. And given that we are at the end of our session, just want to again thank both Alok, you, and Mr. Chakravarti, and thank you to the audience as well.
Thank you,
Thanks.
Aditya. Thanks, Arun.
Thank you.
Thank you.
Thank you so much for joining us. And thank you, audience, for also being a part of the session. We will start the last session of the day at 7:15. Mr. Mohit Joshi, President and Global Head for Financial Services, Infosys, will join us at 7:15. Thank you very much.